If you ever want to be a profitable trader, you need to blow your account. Yes, you heard that right, blow it. Now, before you click away, let me explain. I'm not talking about reckless gambling or Vegas-style trading where you push all your chips in and pray. This is something very different. Something most traders never understand. Picture this, you're managing a $50,000 funded account. On paper, it looks like a fortune. But here's the catch. Your real lifeline isn't $50,000. It's the tiny cushion buried in the rules. A $2,500 drawdown. That's your survival kit. That's your oxygen tank. Yet what do most traders do? They treat 1% as $500 per trade. Sounds small, right? Wrong. That's not 1% of your lifeline, that's 20%. Imagine an investor with $100 million risking $20 million every single time they clicked buy or sell. Insane. Unrealistic. And yet, that's exactly how the majority of traders destroy themselves. And here's where the challenge comes in. The risk challenge flips the script. It forces you to risk only what's real, just $25 per trade. At first, it feels laughably small, painfully slow. But the goal isn't speed. The goal is survival. Because once you survive, once fear is eliminated, profitability becomes inevitable. So the real question is this. Would you take a challenge that dares you to blow your account, only to discover that you can't? Welcome to Stick Trader Mind, your home for trading psychology that actually makes sense and doesn't bore you to sleep. If you're serious about taking your trading to the next level, watch this video to the end. Every trader starts with the same dream: financial freedom, consistent profits, and the thrill of beating the markets. But what usually happens? The exact opposite. Accounts are blown, confidence is crushed, and fear takes over. And here's the uncomfortable truth. It's not because traders are lazy. It's not because they don't want success badly enough. It's because they've been taught the wrong definition of risk. See, when most traders hear risk 1%, they think they're playing it safe. They plug in the numbers, calculate a so-called safe lot size, and hit buy or sell. But beneath the surface, they're not risking 1% of their true capital at all. They're risking 10 times that, sometimes even 20. And the worst part? They don't even know it. This misunderstanding creates the ultimate emotional trigger: fear. Fear of being wrong. Fear of losing again. Fear that every trade might be the one that ends the account. And when fear shows up on your trading screen, it doesn't whisper. It screams. Pushes you to cut winners too early. Pressures you into holding losers too long. It convinces you to double down when you should be stepping aside. Before you even realize what happened, you've turned trading into emotional roulette. And it's not just about the numbers, it's psychological warfare. Imagine going to the gym and doing 300 push-ups on your very first day. Sure, you might survive the first 50, but by the end, your arms collapse. That's exactly what traders do to their accounts. They overload risk, thinking they're building strength, when in reality they're breaking themselves down from the inside out. The result? The same vicious cycle every losing trader knows too well. Initial excitement, sudden drawdown, panic, revenge trading, and eventually, account destruction. Prop firms know this game better than anyone. They don't just allow traders to make this mistake. They count on it. Your misunderstanding of risk is their business model. While you're sweating over your next trade, they're quietly pocketing the fees, fully aware that most traders won't last long enough to even taste consistency. So the real problem isn't the market. It isn't the strategy. It isn't even discipline. The problem is a fundamental lie about risk that every trader has been sold from day one. And until you see through it, you'll keep repeating the same expensive lesson over and over again. And this is where it gets darker. Because once a trader misunderstands risk, the downfall doesn't happen slowly. It happens like an avalanche. At first, the signs are subtle. A few losing trades, a dip in equity, a small dent in confidence. But then the mind begins to shift. Logic fades, emotions take the wheel, and suddenly every click of the mouse feels like life or death. This is the escalation where bad math turns into bad psychology, and bad psychology turns into blown accounts. Think of it like this. Trading with the wrong definition of risk is like driving a Ferrari at 200 miles per hour on black ice. For a while, it feels exhilarating. The speed, the power, the illusion of control. But the moment something goes wrong, and it always does, you're one slip away from total destruction. One oversized loss becomes two, then three. Soon, the trader is staring at a rapidly shrinking account balance, desperately trying to claw back what was lost. Fear morphs into panic. Panic morphs into revenge trading. And before long, the account is gone, leaving only frustration, shame, and the bitter taste of wasted opportunity. But here's the most dangerous part. It's not just the money that's lost. It's the psychology. Each blown account trains the brain to expect failure. It conditions traders to associate the markets with pain, stress, and fear. And that psychological scar is far more devastating than any drawdown. Prop firms thrive on this escalation. They know traders will confuse balance with true risk. They know traders will over-leverage without realizing it. To them, every account is a ticking time bomb. And the statistics prove it. The overwhelming majority of traders never make it past the first few months. Meanwhile, the trader keeps repeating the same thing. Deposit, lose, repeat. Like a hamster on a wheel, running faster and faster, going nowhere. The more they fight, the deeper the hole becomes. And the irony? The trader believes the problem is strategy. So they hop from one system to another, one signal group to the next, chasing the illusion of certainty. But the truth is, it was never the strategy at all. It was risk, magnified by fear and accelerated by ignorance. This is the emotional roller coaster that destroys more traders than any market crash or economic crisis ever could. And until a trader breaks free from this cycle, profitability isn't just difficult, it's impossible. This is the turning point. The risk challenge enters here, not as another gimmick, not as another trading strategy, but as a reset button for your psychology, a way to rewire your relationship with money, risk, and the markets. The rule is simple. Only risk 1% of your real drawdown. Not your account balance, not the fantasy number you see on the screen, but the true cushion that stands between you and failure. In a $50,000 funded account, that's $25 per trade. Not $500. 25. First, it feels ridiculous. Too small. Too slow. Too boring. But this is the genius of the challenge. It strips away the adrenaline, the gambling instinct, the illusion that trading has to be fast and furious. Instead, it forces you to build consistency, discipline, and patience, the very traits that separate amateur gamblers from professional traders. And something unexpected happens when you trade this way. Fear begins to vanish. Each trade no longer feels like a life or death decision. Losses shrink from catastrophic events into manageable setbacks. And when fear disappears, clarity appears. You start to see the market as it really is, a field of opportunities waiting for disciplined execution. Imagine it. While reckless traders are sweating over oversized positions, you're calm, composed, even sipping coffee while placing sniper entries. The market stops being a battlefield of anxiety and becomes a business of probabilities. This is the psychological shift every trader dreams of. Moving from chaos to control, from fear to confidence. And once you prove to yourself that blowing an account with proper risk is nearly impossible, something profound clicks inside you. You realize the goal was never to chase one big win. The goal was survival. The goal was longevity. The goal was to last long enough to let your edge play out. Now imagine stacking this discipline across multiple funded accounts. Risking small, scaling safely, multiplying opportunities without multiplying fear. That's not just trading, that's wealth building. That's how ordinary traders transform into professionals. The risk challenge isn't about speed. It's about rewiring your psychology, reshaping your future, and finally stepping into the rare category of traders who not only survive the markets, but master them. Once you understand the risk challenge, the market is no longer the monster in the shadows. It becomes a system you can navigate with confidence, precision, and control. The first takeaway is simple. Always calculate risk based on drawdown, not account balance. This is the difference between professional risk management and financial suicide. When you anchor your risk to the real safety net, you transform fear into discipline, and discipline into consistency. The second takeaway is this: survival is the priority, profits are the byproduct. The best traders in the world aren't obsessed with doubling accounts overnight. They're obsessed with staying in the game. They know that longevity in the markets is the real edge, because given enough time, a disciplined system will always outlast emotional chaos. And the third takeaway is perhaps the most powerful of all: scale smart, not fast. Instead of risking everything on one account, stack multiple funded accounts. Spread your exposure, multiply your opportunities, and let small, controlled risks add up to big, sustainable gains. That's not just risk management, it's wealth building. Picture it. The version of you that once panicked over every loss is gone. In its place stands a trader who is calm, confident, and calculated. The market no longer controls your emotions, you control your market. That shift in psychology is the true definition of financial freedom. So now the question becomes, will you take the challenge? Will you step into the mindset of a professional, or stay stuck in the cycle of fear and blown accounts? If you're ready to rewire your trading psychology, smash that like button so YouTube knows this is the kind of content traders need. Subscribe to join a community built on discipline, consistency, and financial growth. This is Stick Trader Mind. Until next time, this isn't just about trading. This is about control, about mastering risk, mastering psychology, and ultimately mastering yourself.